All right, and for more on Indonesia's economy, I'm joined by Ankur Patel. He is the co-founder and chief investment officer of the global investment firm R² Macro. Thanks for joining us.
Thank you for having me, Michelle.
So, Ankur, economic growth has taken a bit of a knock. It's now dipped below 5% for 2 consecutive quarters. It's the lowest economic growth rate in about 6 years. So what are the major factors behind the decline here?
Some of the things that are really hampering Indonesia are really outside of its control. On one hand, you have China slowing down. That structural slowdown is hitting Indonesia particularly hard. The fact that energy prices have fallen by 50%, over 50%, has hurt Indonesia given its exposure to commodities. And finally, given that we're really weeks, maybe months away from the Fed raising rates, that external environment has turned on Indonesia. And you couple all those things, and Indonesia is facing a rocky road right now.
A rocky road, and particularly rocky with regards to China. What impact will the renminbi's depreciation have on the Indonesian economy?
Well, if you look at the renminbi, it's depreciating, which makes Chinese goods more competitive on the open market. And another way of saying that is Indonesian goods become less competitive. So overnight, Indonesia has now a tougher external environment than ever before. And also the fact that the renminbi depreciating, that causes the Indonesian rupiah to also depreciate. And the depreciation of the rupiah is particularly bad given that Indonesia has above 7% inflation. If you look at its mandate, it's supposed to have inflation between 3 to 5%. It is well above that, making the job of the central bank that much more difficult.
Well, the central bank does have a daunting task, and there's concern that the yuan depreciation could kickstart a series of competitive devaluations by other Asian countries in order to boost their exports. But given the rupiah is so low, what does it mean for that currency?
Well, if you look at the central bank in Indonesia, they really would favor a stronger rupiah at this point. A weaker rupiah, further a weakness, would actually cause more inflation, which would cause inflation to move even further away from target. So the central bank in Indonesia is actually intervening to support its currency. So it's not really a war that Indonesia is well equipped to deal with. If you look at Indonesia, the central bank really should be cutting rates right now to support growth. But the rupiah weakness in particular is preventing the central bank from doing so.
All right, beyond monetary policy, IMF head Christine Lagarde is calling for bold reforms. What kind of reforms are the most necessary right now and really the most likely to see fruition in the near future?
Yeah, I mean, I think you're right. So with monetary policy very limited at this point, it is the job of fiscal policy to support growth. If you look at Jokowi, now that he is in power, he has the ability to actually embark on an ambitious reform program. And Indonesia has some great strengths that it could take advantage of. Its young demographics is certainly very, very advantageous. And after years of poor spending on the infrastructure front, it could finally spend some resources on that to enhance its ability to grow long term.
Well, let's talk about that. Youth, if you will. As you said, on the upside, unlike other countries, in the region, Indonesia does have a young workforce. How can that be used as an advantage? How can the economy revamp itself to utilize that?
I mean, if you look at Indonesia's trading partners, Japan, China, most of those economies have a very unfavorable demographics. And Indonesia is on the complete opposite side, which means that its labor force is growing and it's going to continue growing. And it makes it very attractive as an investment destination. Indonesia, given its young population, should be able to attract foreign direct investment, and that should then enhance Indonesia's ability in the manufacturing sector, really diminishing its need to rely on commodities. And if all of that comes together, then Indonesia's growth potential is still very much intact.
Are there any sectors in particular? You mentioned manufacturing. You mentioned that infrastructure could also, in a way, because it's suffering, be a boost in the future. So what infrastructure improvements do you see happening, and what is needed to bridge the infrastructure gap?
The big issue right now is that Indonesia is just a sprawling, in terms of geography, it's a sprawling area, 17,000 islands, and right now the infrastructure prevents the trade of goods within Indonesia from being very viable. And also political corruption has prevented sufficient spending on that front. So the idea is that with infrastructure spending becoming something that the government supports, it attracts foreign dollars. Those sectors that are exposed to roads and bridges and things like that would really benefit, and that will allow Indonesia to segue away from commodities into some of those other areas.
All right. Thank you so much, Ankur Patel, co-founder of the global investment firm R² Macro.